Welcome back to the channel. My name is Racky Ryan. Today I'm going to be talking about what is a stock. So back when I was starting out, I was 18 years old. I didn't know what a stock was. I had no idea what I was doing. I didn't know how to trade. I didn't know what a brokerage account was. I didn't know how to open a brokerage account. I didn't know a lot of things about stocks. And so something that I always wish I had was someone who was there to teach me about what a stock is, how to trade stocks, etc. I then went and got a formal education in finance. I went that route, but the majority of my experience was honestly from like reading books and trading on my own, and which I had a lot of good trades and a lot of bad trades, and a lot of errors and learning from my mistakes, and just a lot of honestly self-teaching. And so today I want to basically be the person that I wish I had in the past. I wish I had someone who was there to teach me. And I'm doing this for you guys because you guys have given me so much support. I appreciate all the support that you guys have given me. So this is my way of giving back to you. I've always wanted to teach. I've enjoyed the idea of teaching. If you have any questions, make sure to leave comments below. I will respond to them. I will help you. I'm going to do my best job to explain what a stock is. Here we go. All right, so as you can see, this is the PowerPoint that I made for you guys. What is a stock with Racky Ryan? Let's get started. So what is a stock? The best analogy that I can think of for you in order to visualize this is think of a large pizza. So you have your pizza here, and Jeff Bezos, right here, Jeff Bezos, he's the founder of Amazon. He owns a huge amount of Amazon. So he's gonna have a gigantic piece of pizza. The other people that own Amazon is going to be like a bunch of people like yourself, the public. Also, there's going to be retirement funds, 401ks, all these different institutional investors is what they're called, that's going to own the stock. And then you yourself is going to have a tiny little sliver. It honestly is going to be much smaller than what this sliver is, but I think this should give you an idea of sort of the different types of ownership. So stock is ownership of a company. When you think of a gigantic pizza like we have here, each slice of the pizza is a share of stock. So when you buy a share of stock, you become a shareholder and you're actually an owner of the business. I know you might be thinking like, what? I own a business? Yeah, you're an owner of Amazon. You literally get a vote to say, I think the company board of directors should be these people. They will have company matters that come up. You get informed on them. You're an owner of the business. It's really cool. So like I said, there's a lot of people who own slices. So instead of it just being like this big chunk right here, you should think of it as a bunch of people who own a bunch of different little slices. Then you have your 401k, your retirement institutional funds, and then you have Jeff Bezos, the founders, the executive management team at Amazon, etc., who are compensated with stock options. So they're going to own a slice as well, and that's going to be a big chunk. So why do people buy stocks? There's a lot of reasons. One, for capital appreciation, which means you put your money into the stock market and you expect for the money to grow in value. The second thing is a dividend payment. A dividend payment is a quarterly payment that is paid to you. Essentially, a company makes a bunch of money, they have extra money on hand, they can do a few things with that money. They can reinvest it in the business, or they can pay their shareholders, their owners, you, a piece of the money that they made, and that's called a dividend. So they return capital to you for investing. As an owner, you get to receive benefits of owning in the business, and thus you get paid money in return, and that is called a dividend. Another reason why people invest is called compound interest. When you receive those dividend payments, you can reinvest them into your shares. So if you have one share of stock and you get a 50% dividend, for example, you now have 1.5 shares of stock. So over time, if you remember math, that one share with 50% dividend turns into 1.5 shares, another dividend turns into 2.25. So the first one you gained half a share, the second one you gained 0.75 of a share, and it continues to grow. And after a lot of time, the compounding really, 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 really adds up. And so you see this exponential growth with the stock. Like I mentioned earlier, another reason people like to own shares of stock is because you get to vote on company matters. But the best analogy, my favorite analogy that I was told by one of my professors, he asked the question, why do squirrels hide nuts in the winter? I'm like, I don't know. You tell me. And so he goes, well, in the winter, there's no nuts available. There's no abundance of nuts. Over time, squirrels evolved to understand that they need to hide the nuts because in the winter, there's going to be no nuts. They need to eat to survive. I was like, okay, so what does that have to do with finance? What's your point? And he said basically, well, humans, we get old and eventually we cannot work. So that's sort of like our winter. And during our winter, when we're not working, we need to eat to survive. We need to provide ourselves with money somehow. And he said the best way to do that is by investing in stocks. And over time, you invest now, and in the future, when you cannot work, those stocks are worth more in value, and they've been paying you a dividend. And then when you're not working, they continue to pay you a dividend. So you're receiving nuts in the winter when you're not working. And I just sat there and I was like, wow, that's actually a really good analogy. And I still remember it to this day. And so I really think that that's a good way for you to understand why people buy stocks. A lot of questions I get is, well, what about a savings account? I mean, saving is like the best thing you actually can do. It's probably like the literal best habit that you can do. But the thing with savings is that money in a savings account does not beat inflation. So what is inflation? Well, it's the price of goods rising over time. When you go get your milk, it used to be like 5 cents for milk. And now it's like $3 for a gallon. Well, in the future, it's going to be $5 for a gallon. And then probably $10 for a gallon. And so if you just put your money in a savings account and milk and bread and all these things and these nuts that you need to have in the future continue to rise, well, your money is going to not be worth as much. Your purchasing power, as it's called, is not going to be worth as much. And so what stocks allow you to do is to make money while things are going up in value. Because inflation, as things are going up in value, so is the price of the goods of a company that you invest in. So if you invest in a company and it costs, if you invest in a grocery business and it costs them $5 to sell milk and they're eventually selling it for $10, well, they're going to make an equal amount of profit margin as the inflation occurs. And so your value in your stock is going to rise with inflation, and hopefully it's going to rise more because you invest in good businesses. But at a minimum, you want to at least be getting a return equal to inflation. Otherwise, your savings and your cash is losing value over time. And so saving is a great habit, but you need to do a little bit more. You need to start investing at some point. And so that is why I'm very big on investing. And that brings me to my next point. Again, so why invest? In retirement, you want to be able to survive. You want to be like a squirrel. You want to have nuts that are available for you to eat. You want your money to grow and beat inflation. You receive dividend payments from your investments, so you're receiving money while you're not working, and compound interest. I'm not sure if you're aware of Albert Einstein, but he was a genius in the 20th century, in the 1900s, and he's famous for the saying of compound interest is the 8th wonder of the world. And so this is essentially what happens with compound interest. You start to save, and that one share turns into 1.5 shares, and then 2.25, and then like 3, then 4.5, then 7, then 10, then 15, then 25, then 50, then 100. So your one share went to 100 shares. And it's literally because of time, and those dividends continue to reinvest and they compounded over time. So you definitely are going to beat the losses in inflation when you're investing. And so that is why I'm really big on investing. That is why I really think that, investing is important. And so honestly, if you enjoyed this video today, please make sure to hit the like button as well as subscribe. I'd really appreciate it. I thank you guys again for everything that you've done, for all the support that you've shown me. And I'm going to be making more informational, educational videos for you to give back. Thank you. I am Ryan. I hope you enjoyed this today. Take care. Bye.